Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to Wealth Matters podcast. Today marks the 300th episode of Wealth Matters podcast. So thank you, everyone. Thank you to all the listeners, subscribers, all the guests. I would not have made it this far without all of you. So I really appreciate all of you. And today I wanted to do something special or different. So I wanted to turn the tables to myself and see and have someone who I know really well. And he is going to ask me questions. And I'm bringing back Eric Peoples from episode number 299. So this was the reason I had to episode number 299 with Eric. And then I asked him if he can come back on the podcast and ask me the questions he really wanted to ask me, maybe in person or personally. This would be a great way for me to understand what others are looking out from me, right? What others want to learn from me as well. So this would be a great episode. By the way, check out episode number 100 and as well as episode number 200, episode number 200 as well. We did the same where I had Pranay Patel interviewing me. So today I'm going to have Eric Peoples interview me. As I said, if you have not checked out episode number 299, you must check it out. Eric is a great friend of mine, a business partner on IT, one of my IT businesses. He's also a business partner on a couple of investments we have done together. So we have done a lot of things together in last 12, 13 years since 2009, actually. So it's been a pretty good journey with Eric. It's been a lot of learning and lots of guiding each other as well. So welcome back, Eric.
Yeah, thanks, Alpesh. Yeah, thanks for bringing me back-to-back episodes. Pretty cool.
No, that's pretty good. I am looking forward to this episode because I want to see what you really want to ask me.
Yeah, no, and it's going to be, I think, a unique perspective because, like you said, we've known each other so long and so many various ventures together.
Right.
So yeah, I think it'll be cool. So I think definitely, when you first started this out, we were still in the throes of the IT side. So, I was never skeptical, but it was kind of like, what is this? What is this he's doing when you first told me about it? And I'll give it to you, man, from that day when you were still buying the domain and getting everything set up till now has been like crazy progress, and I got to give it to you, man. I'm truly impressed on what you put together with all that.
Thank you so much.
My wife the other day, I'm like, man, you got to give it to him. He's done really, really impressive to pull it all together, get a following, get things going. All the different people that have been on your podcast, variations, is really cool to see, man. I'm truly, truly impressed by it.
I really appreciate it. I couldn't have done it without you and a lot of friends like you, right? That's how I started. That I told you, I'm starting this. Can you check it out? And I told 50 other friends, and slowly they started listening to it. They started sharing, and now we have about, I would say, 400 investors in my subscriber list, and we have about over 1,000 listeners, 1,100 listeners or so. So it's not amazing, but it's not bad either.
That's amazing. I don't get no one listens to me, so I think that's real amazing, man.
Oh, so and as you know, you and I have done so many things together. Not everything works out the way we want to. Right?
Yeah.
So
100%.
right. So even when I started this, I thought, okay, maybe I'll give it 3 months, 6 months, because they say that most of the podcasts and YouTube channels fail within 6 months. Most of them have closed their shops. They are saying about 91% or so would have closed their shops within a year, right? So if you survive more than a year, then you are in it for long term. So, I was looking at it that first 6 months, let me see if it's working or not, if people are listening to it or not. And I'll continue going, right? And the goal was to give back the knowledge I had learned, but at the same time, learn from the guests. It truly, that was the goal as well, that I wanted to learn. And, a lot of time when you and I chat, we chat casually. When I chat with another, person who I have met, I'll chat casually. But when he or she is on my podcast, then I can literally ask them, right? Not only just grill them, but they will most of the time they will also open the peel the onions, right? And show me what has happened throughout their lives, or they will share their story. So that was a good learning experience for me as well.
Cool. Cool. So I guess we'll go ahead and I'll just start asking questions.
Fire away.
Yeah. So I guess what's the hardest part of doing the podcast? Like just the most difficult thing that you can think of throughout this whole experience?
I would say the hardest part is getting started, right? All of us, most of us are stuck in analysis paralysis mode, right? And we never pull the trigger. Key is to take an action. And even at that time, it was very hard to get started because, as you said, you don't know if people will listen to you or not, if you're going to be able to attract really good guests on your podcast or not, right? So, but as you know me, I'm an action taker, right? And even then, it was hard for me. Basically, thinking about topics, camera, microphone, lights, guests, etc., etc. So that was the hardest part, getting started, right? Getting it off the ground. But once it got going, of course, things started, coming into place, right? Then I was like, okay, if I want to have this guest, then reach out to their friends, right? And started networking, and slowly it became easier. But that was the biggest hurdle for me.
Yeah, I could definitely see that. So with that in mind, what did you learn from getting going, and how are you gonna leverage that learning in future endeavors, and what you take out of the journey so far to start Wealth Matters, and the
So,
podcast?
no, that's great. So, definitely one thing is just get started with what you have, right? If you won't start, you won't be able to figure out what's missing, right? Without doing something, you would not know, okay, do I need this or not, right? And if you watch my first episode or listen to my first episode, 250th episode, and now, you can see a lot of improvement, right? Like crazy amount of improvement, because the first episode, I was the one who was editing, right? I was the one figuring out everything. By 50th episode, I had someone who was editing. By 100th episode, I had a team. Now they were publishing and marketing on all the social media. And again, I'm still not 100%. I'm not still not perfect. Like you can't compare me to someone who has done 1,000 episodes or who has, 10 people team behind them. But it's a journey, right? So what I have learned are two things, right? I mean, actually three things. One, before starting something like this, build a strong subscriber base, right? That's a good to have, right? Because then it's easier for you to get started. Launch it with proper marketing so it can reach more people, right? Because what it does to you by seeing more subscribers or more listeners, it gives you even more momentum, right? Thinking that, oh yeah, I have so many more listeners or subscribers looking out for my episodes, right? And the third is hire a podcast management company from day one, which is what I did not do. So that way I can continue to focus on a bigger picture.
Right. So like you mentioned, starting off with subscribers, how do you get subscribers? Like subscribe to what if you don't have the podcast?
No, that's a great question actually. So before, when I did not have podcasts, I had already started sharing, and you were sharing with me like I was sharing with you what I was doing. But then what I did, I started sharing with a lot more people through WhatsApp groups, on Facebook, on LinkedIn, what I was up to, right? Because then people will started reaching out to me by by commenting, by DMing me. Oh, where did you buy this deal? How did you find it? All that. So now you are building basically your audience slowly. Now I knew who these people are when I'm ready to launch, right? So it could be your WhatsApp group. Maybe you become part of 10 different Facebook groups. Their LinkedIn also has the groups. Now you have people, when you literally launch, maybe there are 1,000 people in this group, or maybe 1,000 people who are following you on Facebook. They are ready to consume your content, right? So, but you have to start building the base.
No, that's cool. Yeah, like I never knew how to actually get started with something like that. So you know me, I share with people around me, but I don't really share broadly.
Right.
I never would have known that. So you mentioned you would have hired a podcast management company from the beginning. Is there anything else like that you've learned from the start till now that would have caused you to? What would you have done completely differently? Like when you first started out with the podcast, with all your learnings to date, would there be something you would have done completely different, or did you feel the trial by fire and learning as you go was probably beneficial? Right? Yeah.
So definitely the having the management company, right? So I don't have to edit. I don't have to publish. I don't have to figure out what all I need to do, right? So they can set up my website for the podcast, because all of that I had to do myself, right? Set up the website, find the designer, website developers, all those things. And the biggest is, of course, figuring out the platforms, all that. So if you have that podcast management slash website management company, then you don't have to do all that, right? So you can spend all your energy as well as effort into finding, the right guests, find building the base, right? As I said, subscriber base, where you should be sharing all this, all your knowledge, as well as your golden nuggets.
Right. Cool. Cool. So with that, what I think was brilliant and really smart on what you did was and like I said, I've watched it from the beginning at arm.
Right. Yeah.
I can kind of when I've never given you this feedback, so it's kind of interesting to do it right on live. But what I thought was, like I said, brilliant and really smart was you got the subscribers, you got the listeners, and out of those listeners and subscribers, I'm assuming you grew your investor base.
Yes.
So now you have people that, as you come up with different opportunities and deals, some of which I'm in on, you have a broader audience to reach out to. And like we talked, or you mentioned in the very beginning, and even I think in our last conversation, I said too, is it doesn't always go as planned, right?
Right.
Everything's not
of course.
so how do you deal with individuals when your last potential opportunity may not yet be a winner? It still could be, but
Right.
as of right now, maybe it's not. And I learned, or I've experienced, when
Yes.
you have people, and even if you give them all the due diligence, tell them to do it on their own, you're not recommending anything. If it's not perfect to what they want to hear, they're in your ear about this or that. And that's one of the things that I learned I don't like. I don't
Right.
like raising money. I think we talked about this before.
Yeah.
I'm not really into that. I learned that the hard way. But how do you deal with that dynamic and that? Yeah.
So this is a tough one, right? So far, actually, a couple of deals are not going the way I want them to be, right? So it's very hard because you are dealing with a lot of different personalities, right? Different mentalities. They all have different goals, even though, and as you said, even you, when you and I are talking, right? In all of my deals, I always mention perform your own due diligence. Yes, if you ask me questions about the deal, I'll be able to answer, but I will always be biased, right? Because it's my deal and I'm also investing. So I have already done my own due diligence and I feel this is the best deal out there, right? But so if you ask me, a lot of time people ask me my opinion, oh, is this the best deal? I'm like, yeah, because blah, 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 because of this. But it's your duty, because it's your money, it's your duty to perform thorough due diligence. Of course, build relationship with operators or partners like me, but perform the due diligence. Now, going back to your questions, right? Two things are very important when things are not going your way. When things are going the way you want them to be, people won't care. That's what they don't even want to hear from you, right? If I email them, no response, nothing. It's when the things don't go right, then two things. One is communication and transparency, right? So as long as you provide constant communication, right? Because when, as I said, when things are going, then once a month or even once every 3 months, if they hear, they are fine. But when things are not going the way you want them to be, then you want to be in touch, in constant touch, right? And that's what I try to do. Sometimes I may not send mass email, but I know some of the investors who have asked me, right? I'll reach back out to them and ask them, this is what is happening behind the scenes. And I just want to keep you posted, blah, blah, blah. And transparency, right? It's okay. We know that even when people invest directly in stock market, and a lot of time they do due diligence, that sometimes they don't, they just hear from friends like you and I used to invest in stocks, right? And
They'll do it
options.
sometimes.
Yeah, options. I remember you telling me, oh, I bought this option, and I'm like, I don't even care how you did it. I was like, show me the ticker symbol. How exactly does that option look, the call or whatever? I didn't even understand what call or put was. I remember that. And I would just place the order, and knowing that I may lose that money.
Yeah.
Right. That was the thing. I knew upfront that, okay, that $1,000, $2,000, I'm gonna lose, if it so that's the thing. Sometimes that is the due diligence you perform, right? And sometimes you go through thorough due diligence, and then also things will not pan out, right? So this is another investment. This is what all of us need to understand. But from my side, the key is to communicate constantly, as well as provide transparency that this is exactly what is happening.
Yeah, no, I think that's a great answer, because if I look at any of the ones that are problematic to me, it's really the lack of communication. It's
Yes.
like, I don't want to have to go chase somebody down. I know it's bad. I
Right.
know it's bad. I don't want to chase you down for you to tell me it's bad. Just shoot me an email once, whatever it is.
Exactly.
Clear communication. I think I agree. And you deal with a lot more people than what I do.
Yes.
Mine's much smaller
Yeah.
group.
Right now we have like 100 investors.
Yeah, I mean, yeah, I couldn't imagine that, right? I wouldn't want to deal with that. Yeah, so I tip my hat to you. I couldn't do that. I learned that I can't do that. Yeah.
Uh,
So I guess going back to that, your deals, right? Like you said, if it's your deal, you're naturally biased, right? Any deal that I have, I'm naturally
yes.
biased because I'm putting money into it. I've done my due diligence. I think it's going to work. I believe in it for whatever reason.
Right.
Do you have like on all your deals, do you put substantial amount of your own money into it, or is there some where you're more a broker, so to speak, or maybe broker's a bad word, but a less amount, or is everything that you're in, you pretty much go in wholeheartedly? Yeah.
So yes, a great question, by the way. So most of my deal, and I would say 90+% of my deals, I would put at least the minimum investment required. So if I'm asking you to put this 50,000 in it or 25,000 in it, then I will be putting at least the same amount. And of course, I don't have money doesn't grow on my trees either. So if I'm doing 10 deals a year, I'm putting at least, if I say 25K minimum, that's 250,000 a year, right? So I tell people this is why I can't put, like, even if I like a deal, I can't put 100 grand into it because I have other deals to satisfy. And I want to show everyone that I have skin in the game, right? So I don't want to be in that situation where, I ask you to invest, but I have not put any money in it, right? And that has happened in some deals like Bitcoin mining fund. And the reason is because, as you know, and you invested in it, I have personally know that some of the Bitcoin mining fund we did back to back, right? So like I have invested in Bitcoin mining fund 1, 2, and 3, but not 4, because 4 literally came a month after 3. And of course, I had already significant money into Bitcoin and cryptos, right? But I did put in fund 6 because it was like about 6 months after fund 4, right? So like that is one example where I did not end up putting money into the deal, and I made sure when I was speaking to all the investors, letting them know, yes, I believe in it, but I already have significant money into it, right? So that is, and those are exact same deals. So they did not differ. So that is the only time where I would not invest. And there is one other scenario recently where I was investing and I had to let another investor in. So I had to back up I have to remove myself from that investment. And I really want to invest in that deal. Actually, we are closing on that mobile home park portfolio next week, but that investor needed depreciation for this year desperately. So I was about to wire fund, and he had called me, and he's like, "Man, I really need at least 50K worth of depreciation." And I said, "Okay, this will give you about 30K if you put 50K," and that was the last 50K left. So I had to let him invest. So that may be the other scenario, but otherwise, I would always invest in my own deal, because otherwise, so I don't try to do like brokerage or anything, because of course, and on the flip side, I don't even have license to do that. So I
Right.
can't, because I need a Series 7 license. I'm not a fund manager. I'm not a wealth advisor or financial advisor. So I can't just broker deals. That would be a strict no-no from SEC perspective. So that's why I'll always have skin in the game.
That's good. Yeah, it's good to know. Yeah, like I said, those things I always wanted to ask how it works, but never did. So it's good to hear that. Where are you in the short to medium term, like the next, year, maybe year and a half? Where are you focusing on putting your own money into? Where are you looking to try to same thing with I've been noticing you've been doing the mobile home parks,
Right.
self-storage. I wish I would have done that first mobile home park deal with you in Alabama or Mississippi or
Yes.
one of those places. I wish I would have gotten in on that one. And I kind of wish I would have done the build from scratch
The senior
retirement
housing.
home
Yes,
deal.
that one is actually doing really good. We are
Yeah.
about to be done.
Nice.
So yeah, no, that's a great question. Right now, Ian, you and I have discussed this offline as well, right? Right now is the time to be definitely to be conservative, right? So I'm not. That's why a lot of people already reached out to me even this month. As I said, a lot of investors are looking for depreciation, including myself. Including I really need it as well. But sometimes, I give preference to investors so that there is no conflict of interest. And that's why I had to let that deal go when he said that I really want to invest, even though I personally need depreciation, right? So, but depreciation is one thing, right? You have to make sure that the deal makes sense, right? A lot of, because and I had made that mistake before. So right now I'm not making it. I just don't want to invest in a deal because I need some loss, right? Paper loss, right? If the numbers don't work, there is no reason to do it. So a lot of investors have been reaching out to me why there is no other deal, no new deals. But I am pretty much analyzing tons of deals. I would say about still a couple of deals every week, just that numbers don't work, right? Or I'm worried about that market. So I'm still going to continue to put my money into it, but I'll be conservative, right? Still, my focus is inflation or recession resistant assets. And recession resistant assets are mobile home parks, senior housing, and self storage, right? Especially self storage as well. And another asset actually I'm looking at right now is RV parks. RV parks killed it during recession. I mean, during COVID time, because a lot of people started buying campers and RV and started living nomad life because they could work from anywhere. But they are continuing that lifestyle because they have already put either significant money into an RV, or they have invested. I know a couple of friends, they have sold their houses.
Yeah.
They are just roaming around all over the country. So actually, as of now, today, I'm looking at an RV park deal, which is closing next week as well in 2 weeks. And I started with me looking for depreciation, but now that after analyzing about 6 deals, this deal looks like a great deal, and it's right in San Antonio, Texas. So that's the key. One is finding inflation or recession resistant assets, and second is very important is the market, right?
Yeah.
Don't forget the markets. And the markets like ours, the Pacific Northwest, right, Southwest, the which went up crazy, are bound to correct, right? But the markets, even though they went up, but where there is enough migration, where there is enough job growth, those markets will do fine. And right now I'm seeing that in, of course, Midwest, because of all the manufacturing industry, right? We are trying to build back, right, America. So the goal is to bring back a lot of the jobs. So Midwest is still growing. A lot of parts of the Midwest, like that's where we are building our senior housing facility in Iowa. So Iowa is doing really great. Indiana is doing great. Kansas, Missouri area is doing amazing. So some of the markets, of course, I can't talk about all the markets there, but I think those three markets we are watching very closely, and we are actually investing in those markets as well. And then if you look at the Southeast or the Sun Belt markets from North Carolinas to South Carolinas, they are on fire, and they will continue to do good because a lot of people are still moving there, right? A lot of jobs are moving there. And of course, don't forget about Florida and Texas, right? Though those markets, maybe single family will correct, but then if single family corrects, those people still need a roof to stay, right? They will move from single family to apartment buildings, or see, I mean, mobile home parks, or they will end up downsizing and will store their stuff in a self storage, right? Because when you downsize, that's why self storage always does really well during recession, because people downsize and they got to move their stuff. And most we Americans, we don't give away stuff, right? We think that all of these are our prized possessions and we need to keep them, even though we will never touch these things. So where do you go? You put it in a self storage, pay 40-50 bucks a month and forget about it, right? So still focus on the same assets, just that now you have an interest rate component to keep in mind, right? So you have to make sure the cap rates work. And the second is, do not rely on rent growth anymore. So always when we were underwriting before, there was a rent growth component. We were underwriting with 2 to 5% rent growth minimum, right? For now, I'm saying for 2 years, no rent growth. Right. So you have to be conservative. And even after putting all those, like looking at the market, looking at the interest rate and no rent growth, even doing all of this, if the deal makes sense, go for it.
Yeah, smart. That's good advice. Let's see. So I'm trying to think. So I mean, I was going to ask, are you going to invest any different with the recession and inflation coming or here? But you kind of answered that just right there. So, I mean, I guess what would be you had to come up with like some, out of the park projection. What would it be? If someone's gonna take a risk and they have truly disposable income to throw at something, would you throw it at crypto right now, or do you feel it's going to go down a little bit more? Or would you throw it in real estate? Would you throw it in stocks? Something else out there that I can't even think of. Just something that what's your just risk on asset if you want to hit a home run that it might hit a home run, it might completely fail. What would that be?
So I would say cryptos, and they will definitely go down. But if you are just doing dollar cost averaging, you will be fine, right? So I think if you just want a home run, then maybe allocate 1 to 5%, again, depending on your risk appetite of your portfolio, to crypto. And by end of next year, I think things will start moving. And as you and I have seen in different, last couple of cycles, the Bitcoin halving cycle, right? The Bitcoin halving will happen May or June of 2024. So right about 6 months before that, crypto start moving, right? And so by end of next year, we'll definitely see the momentum. Also, real estate. Definitely do real estate. And I tell everyone that is the real asset, right? For stocks and cryptos, great. You can throw some money at it, but real estate is where you can literally build generational wealth in the safest way possible. Of course, you can still may not make money, you may lose money, but it's a real asset. It's something you can touch or feel, right? So that's I have more than 50% of my portfolio in real estate. And of course, that is why I talk about it all the time. Just pick the right asset, right? And the important thing is, if you are doing it on your own, you already know, study the market. the location. That's the key. Before anything else, the numbers and all that you can manipulate because it's Excel, right? The way you want, right? When you are biased, you are going to let things slip, right? But if you focus on just the market first and then the location, right? If it's self-storage or car wash, right? We spoke about it. It's very important to have the drive-by traffic, right? It's very important to have it right where it's easier to get to, right? But if it's a nice A class apartment building, people want it somewhere secluded. They don't want, they don't want it that they don't want somewhere that someone can get there easily, right? So those are some of the things you have to look for. But I would definitely say, crypto is one of the top one. But if you want little bit safe play, then real estate is the way to go. I think it will still correct. And people are worried about interest rate. But you and I, we are not worried about interest rate. You and I should be worried about the price we pay, right? It's very, in real estate or in stocks or in cryptos, where you make money, right? When you buy. Yeah. So I don't care if the interest rate is 10%. If my buy price is right, I don't care. We know that historically interest rates have been like 10 to 12%, right? Just that last 10 years were an anomaly, but now everyone is getting used to it. So the government is not going to be able to keep it at 10%. No. We know as soon as they find out that recession has hit, and usually people find out after about 2 quarters, right? As we know, because we look at the last 2 quarters worth of data and then they declare, oh, it's a recession. So by the time we find out, we are actually not in recession or we are getting out of it. That's what happens. The recession cycle, if you look at all the cycles, they are really narrow and small. The bull run is always longest, right? And we just saw that we have been in the largest expansion cycle we have ever seen, right? So I think by end of the year, and this is my prediction, but this is after listening to a lot of people like Peter Schiff, Jim Rickards, George Gammon, and a lot of the, of course, the Rich Dad, Poor Dad, Robert Kiyosaki, and a lot of the other big guys. And they're saying by mid of next year, Fed will stop increasing interest rates. That's by mid of next year. And by end of next year, they will start lowering the interest rate. That is what it seems again. And what happens when they start lowering the interest rate? Everything will start going back up. Because now people will start buying because they don't need to hoard cash. Now they can start investing in the right assets. So let's see.
Yeah. No, it's good advice. Yeah.
This was great, man.
Yeah, no, it was a good one. Good answers, man.
No, thank you so much. I really appreciate it. I had fun, man.
Yeah, me too. And I think it's, like you said, we know each other. So the questions can be a little more pointed and a little more different than it's random,
Yes.
So, yeah.
No, that's why this was great. I enjoyed.
Yeah, no, me too. For sure, man. Anytime.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!